Good morning, traders. It's Richard Miller doing my Ichimoku Cloud Chart Market Review of the Nasdaq 100 NDX index. This is an update on last week's webinar where I covered the market being extended and made the point that it's time for a bit of a pullback, and literally that same day that pullback took place. So it's been a nice little correction, much needed correction. For the market was a bit extended from the top end of the cloud. So what I meant by that at that time was that the price distance between the Nasdaq's price and the top end of the cloud was quite wide, very extended. And now it's in the process of pulling back towards the top end of the cloud. Now, from an Ichimoku cloud chart perspective, the price action taking place on above the cloud is bullish, and price action below the cloud is bearish. So bull market, bear market is defined from a cloud chart trading perspective where the price action is taking place. Right. Now, the most recent sell-off, we sliced through this little green line there, which is the turning line. It's the highest high plus the lowest low of the last 9 days divided by 2. So it's a pivot point of the last 9 days. And then it hit the purple line, yeah, which is the standard line or the baseline, which is once again the highest high plus the lowest low of the last 26 days. And we divide that by 2. So we now have basically an average price of 9 days, an average price of 26 trading days. And these levels tend to be support. So similar to a moving average, just where we look at the moving average of the highs and lows. Then market sliced through that line too, which is a very, very aggressive sell-off. And then we hit the front end cloud level here, 11,092. It's the bottom end of the cloud, which is cloud span B. That's the highest high and the lowest low for the last 52 days, divided by 2, plotted 26 days ahead from a cloud chart perspective. So that's a pivot point or a average price of the last 52 days, for example. So it's a significant support level from an Ichimoku cloud chart perspective. Then the market rebounded from that level and retested it yesterday. So if we lose support at this 11,092 level, we're going back down to the top end of the cloud span A, which is 10,854. Now, cloud span A, from a cloud chart perspective, is the turning line plus the standard line divided by 2, plotted 26 periods ahead. So it's these two lines, the green one and the purple one, that we take. We average those two, and we plot them 26 periods ahead. So it's almost like we're making a forecast forward where the price action, these support and resistance points might be. Now you can see that this point here, 10,854, is the top end in the cloud, so there is downside risk towards this level if we lose support at 11,092. Okay, but if yesterday's rebound continues today, the next target would be 11,718 and then 11,987. Now 11,987 comes from the 4-hour chart, and that's the front end, the top end of the front end of the cloud. Okay, so that's a key resistance zone. Here you can see the more swing trade tests of the cloud chart support. So we are in the cloud, we're close to the bottom end of the cloud support. We need to swing trade. The market, Nasdaq, needs to swing out of this, get past the top end cloud resistance, and then it should make its way towards the let me just put this level in there. The front end cloud span B resistance zones, 11,646, is then another level to watch out for on a 4-hour chart. So from a swing trade perspective, we're buying this support test here at the bottom end of the cloud, and we're looking at taking profits off the table when it hits resistance levels 11,646, 11,718, and 11,987. So that's the upside potential. The downside risk on a 4-hour chart is if we slice through the bottom end of the chart, that becomes bearish. Then we're going to look at 1084, and in a very weak market, we're going to hit 10,534 and 10,474. Now, where do those levels come from? We look at the weekly chart, so we can see the downside risk in the Nasdaq. If it would update, that would help. Come on, where's the update? There we go. Now the downside risk is this level. So those levels, 10,534, 10,399, and 10,724, they come from the front end of the cloud here, as well as previous key support levels. So there is downside risk in the Nasdaq to these levels if this correction continues. Now, once again, the weekly chart is very extended from the top end of the cloud, so there is more downside risk involved in here. So September could see these 1074 levels being tested and down into October, so be aware of that. That's the downside risk. This candle is very negative. It's almost like an entirely bearish engulfing pattern at the top end of the chart. Very, very negative overall. But from a short-term swing trade perspective, we're looking to capitalize on this move, and if that, and then we could look at going short when it's done that move for the next drop down. So weekly chart still extended, not at the woods yet. Daily chart getting closer to key support, testing front end of the cloud, swing trade back up to the top end of the cloud there, and we can see the 4-hour chart here where we are fighting for support within the cloud. So normally from cloud chart perspective, the sell-off would take place, bounce off the bottom end of the cloud, come out, struggle with the top end of the cloud, break through it, and then continue the rally. So in this case, we need to see the price action regain a close above the cloud and then move higher. So levels to watch out for if today's rebound continues. 11646 is the first big resistance test. Okay, until next time, happy trading.